Thank you for tuning in today to the Well House. I am Danielle Barber with Texas Classic Insurance and my co-host, Jon Wells with the Wells Inspection Group. And we are honored today by Chris Simpson's presence.
It's this guy.
And those shoes.
And those shoes. Today he's going to give us some little insight into the investor market and being a home flipper and being an investor and his shoes. So
His shoes are top priority.
Top priority. So let's get it going.
It's Chris Simpson.
That's me.
Why don't you tell us a little? I want to know about the shoes first. Before we start anything else, I want to know about the shoes. I'm assuming that is the Incredible Hulk.
These are the Incredible Hulk. But I'm a avid Vans shoe fan, or avid shoe collector, I guess is the better terminology. And so I have a lot of Vans shoes. And my daughter's seen these, and she thought that I absolutely had to have them. Even though they're the Hulk, they're actually based off of my zombie toe. And so she's seen that they were green and thought they belonged on my feet.
So, zombie toe.
Yes, I have
See,
zombie
now
toes.
that leads into a whole new line of questioning here.
Yeah.
So
Maybe inappropriate for
Chris was worried
this
that, he
YouTube
didn't
channel.
really have a product to sell. He didn't really have, so he was kind of questioning.
so we're still zombie toes?
Yes. I'm not saying that you have to cut it off and sell it to anybody. I'm just saying you might want to. Now that you've
OnlyFans
opened,
page.
now that
Your
you've
zombie
opened
toe.
that door,
Uh-huh.
people
Well, if you
inquiring
got
minds
a
want to
foot
know.
fetish, my feet are not for you.
Okay. It depends on what fetish it is, though.
Yeah.
If zombie toes, then you're in.
Gotcha. Okay.
It's a small following.
Small.
But you might be able to charge a premium because they will be freaky people. I'd be scared to see what else they like.
It's
Yeah,
all about knowing your market.
We were in Galveston one time on vacation, and I had an ingrown toenail, and my wife thought it'd be a good idea to take me to get a pedicure, and because I'm not a big fan of pedicures, and I don't like people touching my feet or do anything, and I was like, man. And so I know a lot of our friends, you see them on there, they're getting all their stuff done, but I'm like, I'm a man's man. I'm not going to do that. So anyways, I let my wife talk me into going and doing that on vacation, and the lady kept on, she's like, oh, you have an ingrown toenail? I was like, yes. And she's like, well, I'll get it out for you for free. And I said, just leave it alone. And she's like, no, I do for free. Doctor, very, very expensive. And I was like, no. She said, I do for free. And I was like, okay, fine. And anyway, she wound up getting my ingrown toenail out for me. But the problem is that it came back so infected and so nasty that I had to go and actually get it removed.
The whole toenail?
The whole toenail by the doctor. So all that money she saved me, I wound up paying the doctor to remove my toenail. And then they put all the deadener stuff inside of it so it doesn't grow back. But I'm a strong-willed person. And so my toenail decided to grow back anyways. And it's this itty bitty, like an eighth of a toenail. And it looks about like this shoe right here. It looks like it just came back. I was like, I'm alive. It's a zombie toe. And so she's seen these fans, and she was like, I got some shoes for you. So,
I'm glad we got some clarification on this.
That's awesome.
yeah, just in case y'all want to know about my feet issues.
Yeah, well, obviously I did. That was the first question I asked.
So
This is going to be not your typical type interview, obviously.
No,
Anyways,
because it's Chris.
Because it's Chris.
The Simpson.
Yes, exactly. So, but no, Chris is a property investor. Why don't you kind of just tell us a little bit about what you look for in an investment, in a property that you're looking to, somebody might be listening that might have something coming available, and they say, hey, this is perfect for Chris. If they actually listen to the show.
Or they
that part I
might,
don't know about.
Assuming somebody's actually listening.
or they might be inspired and be like, I'm going to do what he does.
Well,
We don't need any more.
I tend to, we don't need any more.
No.
No more investors. There's too many.
Yeah.
There's really only one thing that I tend to look for whenever we're looking for properties, and that's does it make money? That's the key thing right there. It's about my only requirement. Does it make money? And as long as it makes money, then I'm interested.
Dollar and cents.
Dollar and cents, and you got to look at every single deal different. It doesn't matter if it's a $1 million home. I never buy because I'm way too poor for that. But it doesn't matter if it's $1 million home or a $50,000 home. It all comes down to the same thing. Does it make money? And so from there, I mean, you're just looking at repairs and, I mean, fees and all the other different things, and you just add up all the costs. Hey, does it make money?
No.
I don't know.
It's going to net me a profit.
Yeah, I know.
Can I make money doing this house? Now, what kind of houses do we typically look for? There's an old adage. I don't know if you remember it, but tore it from the floor up.
Mm-hmm.
And that's how I like my houses. Tore it from the floor up. And it's like my college days. The market is so flooded right now with investors. There's so many people that are out there flipping houses and trying to get into the real estate market that people take just about anything. And of course, the easier they look, the more people want to do them. And once you get into the properties where they're quite a bit more distressed and they're more foundation issues and cracks running throughout your walls or walls missing or things like that, then people tend to shy away from those a little bit more. And so we like to have those where they're a little bit more messed up because it kind of scares away some of the competition and leaves a little bit more meat on the bone for us.
Yeah, well, like we were talking about, those some of the other types of investors. I would say investors, flippers. I categorize them differently. A flipper may not be an investor.
Right.
There's two different types of mindsets. You might have a flipper that goes out there, and they're perfect. They go out, buy a home, fix it up, they make a couple $1,000. They're happy. That's different than an ROI. So somebody else that's going to go out there and actually put forth an effort to basically increase the value more so to where you get a better basically return on your dollar. Oh, yeah. That's what you want to look for.
If that's not why you're doing it, yeah.
Yeah, and like I said, there's some people out there that they just look at the dollar amount. They don't actually look at the percentage that they're getting in return. They just look at, am I going to make $1,000? Am I going to make $2,000? It's not necessarily always the perfect plan.
I think most of the investors don't even look at that. Most investors are just trying to see if this is something they can even do. Hey, we want to experiment with this. Can we make money? And I want to say that's probably the biggest. If you're taking all the different investors out there, house flippers, whatever you want to call us, and you're putting them in categories, and the biggest category are people that have probably flipped less than 3 homes. They're just, hey, we're experimental investors. We want to see, is this something that we can do? We're trying to get our toes in the water and see if this is something that's feasible for us. And people who do that are, they typically pay a lot more for homes your first time. When you don't know what you're looking for, right. And you don't. Not only do you not know what to look for in a house or what to really pay, but you don't really know what you should be expecting to get as far as that ROI or anything like that. You're just really more or less just saying, hey, can I do this? Is this something that I can manage? Mm-hmm. And so yeah, definitely was trying. Where was I going with that? But yeah, just going as far as in calling people investors or not investors and what they're actually looking for. So
you're like a super flipper. So last year you did how many houses?
Last year we did 32 houses, which was our goal was 50. So we were quite short.
But still, I mean, 32 houses is quite a huge number in comparison to probably 80 to 90% of the other.
Especially with the way the market was last year versus the year before. We had a crazy market in this last year.
Yeah, we did. We actually did in 2020. We did more homes than we did last year in 2021, but we were more profitable last year in 2021.
And that's what we were talking about Friday at the breakfast that Danielle just so conveniently forgot about, or just kind of didn't want to be with us, which is okay. But we were talking about help me out here, because I'm not drinking, so it kind of slips my mind when I'm not drinking. When I'm drinking, I can remember things. Funny enough, but what were we talking about Friday?
I don't have any idea. We talked about a lot of stuff. I can't remember hardly yesterday.
Short-term memory. It's a problem.
It is.
We all clearly need more sleep.
I guess that's what it is. Yeah. Well, it'll come back to me. Maybe
we'll circle back to it.
Circle back.
No, it was a real profitable year. We did very good, but we definitely mixed things up. We bought some different houses than what we normally buy. One of my partners, Lane Stoltz, really pushed me to buy in some areas I don't normally buy, like the Ridgely Country Club. And I normally, as an investor, stay out of niche areas. I don't like special areas. I don't like to limit myself to special buyers. I like to be more generalized, and I want anybody to buy my home. I want whoever's going to pay for it.
Yeah,
I don't want just a small little area over here. Elaine's kind of pushed me to buy a little bit more niche areas. Of course, those people do tend to pay a little bit more for their properties, and so while we did less properties because we did focus a little bit more on some niche areas, we were able to make.
That's what it was. Being able to buy less houses but make more money, which is key. I mean, the less money you spend, the less time you spend on a house, the less liability you have. So
more efficient.
Yeah, exactly. You become more efficient, and you get that bigger return.
That's actually thinking like an investor when you're analyzing all that stuff. So we're talking about people who are just starting at the start of the interview, brand new people. Well, you said you don't even know if you want to call them investors or flippers, or we'll talk about just trying to get their feet wet and see if it's something that they can even do. It's when you move from can I do this to starting to think about things like that. How can I do this more efficiently? How can I actually make money doing this? I didn't make money last time doing this. Let me try this time. Or how can I save money? How can I do this financing? How can I save here, save there? And you start actually trying to treat it like a business. That's where you really graduate from a flipper to an investor. I don't know if y'all are actually familiar with the numbers, but people actually starting a brand new business with the SBA statistic is when brand new businesses that start up, 21% of them, as of 2021, 21% of the brand new small businesses that started closed within the first year, and 50% closed within the first 5 years. Mm-hmm. So for an investors, when people decide to be an investor, the average or the percentage of investors that quit or fell within the first year, or whether their first home, 90% of the investors don't make it past their first home.
They run out of money.
Or more so than that is the fact that they don't actually, hey, can we do this? It's more of a hobby. We're still working our normal job. We're still trying to do our normal thing over here, and they're just, hey, we don't actually look at this as a business. We look at it as, hey, can we do this? It's more of a hobby. Is this something we can accomplish, or can we just make some money? Can we just buy a house and hire somebody to fix it and make some money? And that's all they're really thinking about. And they don't actually move on to the, hey, let me actually treat this like a business. How can I save money? How can I do this? How can I do that? How can this work better for me next time? And transform. It's the transformation of thinking like that is what makes somebody an actual investor versus.
Right. And that's really with any business. I mean, like with mine being a home inspection business, we add services, as many services as we possibly can throughout each year. We add people. We add whatever we need to do to make that next step to stay ahead of the industry. And same thing with people who are investing. You got to have that right mindset. If you don't have that mindset, you're going to fall. You're going to fall flat.
Yeah. I've tried offering other services to our portfolio, but
yours is a little different.
I couldn't get any buyers.
we may have to. I may have to switch channels if we're going to talk about other services. We're going to go ahead.
Back to OnlyFans.
OnlyFans, absolutely.
Yeah.
So, I don't know if you want to talk about this, but Chris actually has a really interesting backstory.
I don't know what you're talking about.
Your youth. I don't know if you want to talk about it.
Oh, I mean, can, but I don't really know how that's applicable to.
I feel like it has made you so tough to deal with the industry that you're in, because you can't come in as an investor and have a weak disposition. Like, you have to have a lot of guts, grit, and glory. Referencing back the book we just
I just
That's
have
an
a wife
excellent
at
segue.
home. Yeah, I have a wife at home. I don't want to let down.
Jill.
That's the thing
I can
right
understand that.
there. I don't want to let her down, and I got mouths to feed.
You got mouths to feed.
I'm a pretty determined person. So.
Yeah.
Absolutely.
But we did start buying back in 2007. I started out actually as a loan officer for a mortgage company.
Shut the front door.
Sure did. And I remember people telling me about, or some of these other people that were in the office with me were buying homes. And I knew they were just as broke as I was. And I was like, how are you doing this? How are you buying these homes and selling these homes? They're talking about it and bragging about it. And I was like, I know you're just as broke as I am. What are you doing? They're like, oh, well, so-and-so gives us money. I'm like, who's so-and-so? They're like, oh, he's a hard money lender. I was like, what's a hard money lender? I was like, you're telling me there's somebody that actually gives you money to buy the house and pays you to fix it, and then you just sell it and you get to keep the money, and you just pay them back? And they're like, yes. And I was like, oh, wow. I was like, I got to start doing this. And so that's how I actually got into doing houses. And but then the market crashed.
Yeah, 2008.
I had 3 houses at one time. It didn't work out too well. I was like, oh crap, do everything I could just to get rid of them.
Yeah.
In fact, our second and third home, we didn't even sell. They got foreclosed on by a hard money lender.
Oh crap.
I know, that's how it started.
Rock bottom.
That was tough.
Shit.
Should I do this again? I was really gun shy. When I got back into business, I actually started thinking that I was just going to do commercial properties only because I was so scared of doing residential again.
2010.
But Jared Arneson had
really
actually pushed me into doing the residential stuff again.
Yeah.
Thank goodness
08, 09 was bad.
Yeah, never turned around. So.
Yeah. That's cool. How many commercial buildings did you do?
No, well, we just bought them as in long-term investments is what we were thinking originally. And so we have 7 commercial rentals.
Okay.
And so we have 27 rentals total.
And they're all rented out now?
And, yeah, everything we have is rented. The rental market is crazy.
Sorry,
if
folks.
you talk about
No
a housing market that for buying and selling as far as real estate goes, that's crazy. You want to talk about something that's even crazier is try leasing a house. Those things are through the roof right now.
Oh, yeah.
So many people can't afford the down payments that are going with these new mortgages.
Yeah.
Record mortgage costs have record down payments.
Right.
Yeah. Anywhere between
so many people can't afford to buy
20%.
homes right now that the leasing market is absolutely crazy.
Insane.
Yeah, rent,
so
lease, all that's skyrocketing.
Yeah, and we're having record. It's a record number of people moving into North Texas every single year. So
and then
over 500,000 every single year moving into North Texas.
It's ridiculous number
there's
of people.
supply and demand. There's not enough homes.
Yeah.
That's when people ask me, do I think the market's going up? Do I think it's going down? What do I see for 2022 or in the future? Do I think it's going to crash? Regardless of how anybody else's market is, whenever you have 500,000 people moving into North Texas every single year, we're not going to buyers. We're going to have buyers. Our market's going to be going for a while until people stop moving here. We're not going to be seeing anything, any stalls anytime soon. We're not going to see any slowdowns.
Yeah, and I just saw where Facebook was looking at moving their parent company to North Texas.
Please no.
Great.
Meta? We can move Meta?
Meta.
Please whatever they want to call themselves.
Please don't.
Yeah, but unfortunately, it probably will happen.
It will.
And I mean, it keeps people like us in business, but it's also a scary thought about what it brings.
There's a fine line, between like you're wanting your city to grow and flourish versus 1,600 homes coming in with no infrastructure to support it. Like there's a fine line.
Like that's what I was saying. The roads just can't keep up with what we have now versus what we're going to have 5 years from now.
Oh yeah, that's one of the problems you see here in our own town, Hazel, is the infrastructure was never set up to be what it is now. Right. And so we have all these drainage ditches and whatnot, and so we have all these feeder roads and artery roads that can't sustain, like they can't hold our traffic, and so our traffic's getting backed up and crappier and backlogged, and they can't widen the roads because we have drainage ditches instead of underwater
sewage.
Sewage, and so but anyway, so you can't you have the drainage ditches on the side, so you can't expand the road without cutting into people's property, and nobody wants to give you their nobody says, oh sure.
That's what's going on 51 and 199 right now. That's why they dug all that up, because the drainage couldn't handle it.
Okay, sidewalks too. If you see our lack of sidewalks,
Yeah.
You have to claim eminent domain just to put some sidewalks, down here in Hazel.
Well, I mean, Hazel was when I moved out here. I think it was like a little over 9,000 people. That was 2013, somewhere along there. Maybe, yeah, I don't remember yesterday. So,
I got here in 2015.
I moved here, oh my gosh, I want to say 18 years ago. I met my wife and we came to visit. And I never left.
Nice.
I know.
You heard the banjos playing and you were like, this is where I want to be.
No,
I have a banjo shirt I need to wear.
I was actually going to buy our first house in White Settlement. And her family was real supportive, that my in-laws. I remember her dad saying, because she was real worried about leaving Hazel. She was a hometown girl and been here her whole life and didn't want to move. And I remember her dad saying, "Oh well, you're married now, and if that's where he works, you got to follow the money. You got to go wherever he goes." I'm just talking about White Settlement. It's 15 minutes down the road.
Yeah, right.
And but anyways, I was like, I work in Fort Worth. I've never worked in Hazel. Why would I move to Hazel? I want to be in Fort Worth. And so anyways, we drove to go look at our this house we wanted to purchase in White Settlement, and I remember Dad showing up, and he was like, "What? You're not even gonna look at a house in Hazel?" What happened to this support? We've been in Hazel ever since.
My bad.
Sounds like a good decision.
I love it. And y'all have 3 kids and 1 bonus kiddo.
Mm-hmm,
I don't know how you phrase it.
I was called 4 kids. We have 19-year-old twins, 1 boy, 1 girl, a 15-year-old son, and then we have an adopted daughter, Elisa, who's 14.
Awesome.
And so I'm trying to get one of those suckers to be my little protege and take over our family business, but I can't get anybody to want to work.
Yeah. I'm not even. That's a totally different show, different road we'd take.
I mean, it's really all part of the same show. I mean, it's really it's the epitome of my career, getting people to work. That's the hardest part about being an investor, getting people to show up to work.
And actually do something.
I know. I can't get people at home or people outside of my home to want to work.
So
I really don't have that problem. I've got an inspector that does most of the work for me now. I just sit back and.
I tried to take a lunch break, go to KFC, and he's like, "I can't get nobody to work either. Sorry."
I'll go get my
toes. They're
I'll go
closed.
Get my toes done.
It's crazy.
Go get a pedicure.
Oh my gosh. How many crews do you work with? Like, do you employ them or do you outsource your?
That's a little bit of everything. So right now we currently have 6 guys that work for us full time, and we keep them busy full time all the year round. They never have to worry about work or look for work. And then we have several subcontractors that we work with on a regular basis. That they're not technically employed with us, but they almost work with us nonstop. But I don't give them the same guarantee as I do our actual workers. Our workers, no matter what, you have work. And
you'll have something to do.
We have something to do, even if it's at my house raking leaves.
Right.
We never get to do that. My house is so I have so much stuff. You walk into my house and you look around and you're like, I thought you fixed houses. Really, you need to do stuff. But we can never make it to my house. We're so busy all the time doing everybody else's.
Well, even your house non-complete where you think it is. Every house you've lived in, I think, is just gorgeous.
Well,
so
thanks. I really appreciate it.
Yeah.
But that's been our hardest part. We had a whole other crew, 4 other guys that we kept busy. That were specifically dedicated to us too. But last year was just he wanted. The beginning of the year, he sawed his hand off.
Ow.
On one of our job sites. I walked up and I seen like a blood trail and I started following it and I walked up to the table saw. I was like,
Oh, wow.
Oh, crap.
But it was a family crew. When he left, everybody went with him. And so, which was a big deal for us in 2021, trying to find a replacement crew for that. It's one of the biggest things that Lane and I really struggled with this year. And probably every new investor that's out there right now trying to get some homes started and get their career going is, if you don't already have people working for you, finding people to work for you is a really big deal right now.
Mm-hmm.
Yeah.
Especially qualified contractors. when I talk about people moving to North Texas and moving into, out of state, one of the things they don't actually think about is not only does it drive our housing market up and the prices of our houses up, but it also creates a shortage of contractors and drives the prices of remodeling up as well. Because what you have is you have people moving in from these different states, and they're buying a lot of these houses sight unseen. Just their realtors just walking along with a camera.
I've done many. We've done many inspections on
just like that. And so they come in and they're like, "Well, we don't like this. We don't like this. We don't like that." And so they pay not only $20,000 over asking price for the house, but then they come in and they want to remodel the whole thing. And so they're hiring these contractors. Contractors are coming in and they're gutting these whole houses, and they're paying these contractors top dollars to remodel these houses. And so now, not only do you have a housing shortage because people from out of state are buying up these houses, they're also taking the contractors away as well, and they're paying them full price. So as an investor, not only are you having to compete with all these people coming in needing contractors, you have to try to convince these contractors to come and work for you as an investor for cheaper, which is not the easiest thing to do.
Right.
And so you have to really try to sell them on, hey, we always have work. We always have these houses lined up. So whenever this house is done, you can go to the next one. And that's what I really try to, and for anybody who's listening, who's trying to take care of the same, or has the same problem, what I really try to do when I look for these contractors is I just tell them, hey, what is it that you make a year? What is it that you want to make to pay for you and your guys? And then just divide that up and say, okay, that's how I need you to bid my houses. You will always have work. So if you want to make, I'll just make up a number. You want to make $12,000 for the entire year. And this job is going to take you a month and a half. Then bid this job at $1,500. And because that's going to pay you what you wanted to make the entire year, and then I'll be able to make money, and you won't have to have because that's what they do. They make so much money on one job, and then you spend however long looking for the next job. Well, you don't have any downtime. I'll just keep you busy the entire time. And so I try to get them to bid my jobs like that. Obviously, it's not for $12,000,
right?
$1,500, but
Keeping it simple
that's
for
really
us.
how I try to pitch that to contractors whenever we're hiring them, and how I try to keep stable crews. Because it is really important to have stable crews, because there's going to be certain things that you like to do on your houses, and things you like to do a certain way that maybe somebody else doesn't know or doesn't like, or they don't do that way. And so you have to redo this with every single contractor. At 32 houses or 50 houses, that could be daunting, going back and doing over and over and over and over.
Time is money.
Yeah, and so very much so, especially when you have 8 houses going at one time. And we put on, I looked at my Mile IQ, my tracker app for my mileage, and put 5,000 to 6,000 miles a month, and most of that's just driving around Dallas Fort Worth. Not putting in big mileage trips. It's just boom, 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 boom.
Yeah,
boom,
so
boom,
many
boom,
back
boom.
and forths. Yeah.
Yeah, and so it's a big deal to try to keep those people, and so that's how I try to pitch it for contractors and keeping contractors working for us. But it's still not the easiest thing. It's a constant struggle trying to keep qualified workers.
One of my last questions that is, we have so many people moving here, but yet we have an employee shortage. It doesn't compute. I mean,
the numbers don't make sense.
It doesn't exactly. It doesn't make sense that we have so many people moving here, but yet everywhere you go, it's help wanted, help wanted, help wanted. Where are all these people that moving here? Where do they work? Do they work? I don't know. It's one of those things that I've been trying to figure out, and I know it's impossible to figure out, but it's kind of mind blowing. When we're sitting here talking about trying to find people who want to work, who are consistent with showing up. It just blows my mind that we do have such an influx of amount of people coming in, but have so little people out there actually that seem to be working. Now, is it because that some of these businesses haven't hired enough people to keep up with an inflated demand now, because we do have more people? So say for instance a restaurant that had 10 people. Well, that was probably good 2 years ago, but now they have such an influx of new customers. Is that where the shortage coming from? Because now they haven't supplied that additional help that's needed to keep up with an influx of customers. I don't know.
I don't know if you really want to scratch your thinker. Then look at the unemployment statistics, and unemployment's down, and so
it's like
people
5%.
People are employed. So,
but where are they working?
I don't have any idea. Not at KFC.
Yeah, exactly. I mean, it's like 5%, which probably a year or 2 years, about 2 years ago, the highlight.
But the unemployment rate is based on people actively seeking
employment.
And so if you haven't been actively seeking employment within 90 days, you drop off that unemployment rate. So it's not really a true.
It's
a true data point, in my opinion, right?
Yeah. Nothing's really a true,
because if you're
especially when you talk about government,
if you're getting a COVID relief check and you're not actively looking for employment, then you fall off that number.
The number that we're really watching right now isn't really unemployment or labor. What we're really focusing on at this moment as a company and trying to plan forward is we're looking at inflation and interest rates.
Kill you.
Those are two big things right now. Inflation, one, just the cost is of everything is going up so much more.
Exponentially.
And we had multiple jobs last year where we had trouble with contractors because they bid it to where they were actually making money on a job, and the prices were rising so quick that by the end of the job, they're asking for more money and saying, "Hey, we truly aren't making anything. We need more money. We need you to pay more because otherwise we can't work." Yeah. And you having to say, "Hey, hold them at their to the fire and say this is what you said you're going to do the job for, or pay them more," and having to redo your budget. But with all the inflation going on right now, not only is it more expensive to rehab a house for investors, but we're also looking at what's that going to do with our market right now, because the feds are already talking about raising rates, and they're supposed to raise them 3 times this year, and rates are already higher right now, which is up to like 3.625%, and they're already higher than what they were at any point last year.
Mm-hmm. Yeah.
And that's how this whole game works. For anybody that doesn't know, the lower their interest rates are, the more people buy because things are cheaper. And not only is it the more they buy, but the more money they can spend on a house. Right. And so because your payment's going to be cheaper with the interest rates. So if you could maybe only afford a $300,000 house at 4%, well, now that the rates are at 2.5 or 3%, now maybe you can afford a $400,000 house. Mm-hmm. And so what's that going to do with the market this year if rates are going to keep on climbing? We know that there's still going to be demand because so many people are moving here to North Texas. So I don't see.
Now you're in.
I don't see any kind of. Yeah, I don't see any kind of market crash or any reason to be scared or concerned. But what does that look like for the buyer for 2022? What does that look like as an investor?
They're going to spend more money. Investors are going to hurt because they're going to have to spend more money to get into a house. They're going to have to charge more money. But like you said, people are moving here. They're going to have to find somewhere to live, whether it be pay more money for a house, or they're going to pay an astronomically more money if they're going to lease or rent.
Yeah. That's the biggest question I'm answering right now at work, and we're literally having to reshop almost every single client's insurance right now, which is insane. Well, your reconstruction costs went up, which makes your rebuild on your home went up, which impacts your premium, and then you have the cost of the rebuild and all that, and then plus we have every type of catastrophic weather event in Texas, and we've experienced all of those
24 hours
in the last 365 days. So insurance companies are way behind in our area, so our premiums reflect that. And so the hardest conversation I'm having with clients right now is, why would they raise my rates? It's not just you. They didn't just raise your rates.
Yeah, it's going across the board. It's everybody.
Across the board.
Yeah, well, just home value shooting up so much. Just in our area here in 76020, versus right now from this time last year, the average home values went up 30% in our area. And so if your home value is going to go up, it's going to be more expensive to insure it.
Right.
It's going to be more expensive tax-wise too. Right. And so how's this going to start playing out in 2022,
Correct.
2023? And so these are really things to be looking at, being mindful as a business.
That and, your costs, everything's going up. But wages tend to kind of stay stagnant for the most part.
Definition of inflation right there. When everything goes up with wages.
Yep.
Yeah.
So
interesting.
definitely going to be something to be thinking about and looking into.
Yeah.
So what is your goal? How many houses do you plan to flip this year, or have you recalibrated your thinking from number of houses to more of a volume dollar amount?
Yeah.
Well, we're actually trying to save money. This is going to be a little bit different for us this year.
Mm-hmm.
So we've been so focused on houses as an investor. So just flipping homes. Flipping homes is actual revenue. Jill and I originally had a goal, and it was I wanted to retire by the time I was 50, and I wanted to have enough rentals that were going to be paid off by the time I was 50 that I felt like I could do that without having to work, unless I specifically said, hey, I want to go hand out stickers at Walmart to people, then I'll do that. But otherwise I didn't have to. So we originally
You'd
started...
be like the greatest Walmart greeter ever in history, by the way.
I would definitely get fired. I would only last so long. Chris, you cannot pick people's noses like he had a booger hanging out.
I was helping him out, okay?
Yeah, but COVID freak out right there. Ah!
Yeah.
Especially when I didn't wash my hands before I picked the next nose. But we had really focused on that number for so long about how many rentals could we get, because I didn't ever want to refinance rentals, and that's what you see in the investment game is the Barber method: the buy, the rehab, the refinance, and the repeat. And so people want to, that way you keep everything going and you just get your money back constantly, and then you acquire these properties and you can build your portfolio like that. Well, I didn't want to just build I don't want to call it a fake portfolio because it's not, but so many investors do that. That's almost like blasphemy. People are like, you just call what I did fake. But you know, like the equity that you actually get out of that isn't going to be near as much, not when you're long-term game. And
Right.
So I wanted to be able to do it. I wanted to be able to buy houses cheap enough at a low enough value. So I needed them to be homes that needed to be rehabbed. And then I needed to be able to fix these houses and refinance them and keep them, but not do any of the cash outs and get my money back so I could repeat it. I just wanted to keep all the value in the property, the equity, and then hopefully by the time I was 50, these houses, they'd start being paid off and I'd start having money come in. And I'm very proud and very humble to say that fortunately Jill and I have met that goal, and I don't feel like I need to do that anymore. And so last year it was a big year for us, especially when I partnered up with Lane Stoltz. It was about the money, to get the money. And so that was our big focus, and we did pick up a few rentals last year, but we really just tried focusing on making money. Going forward into 2022, this would be, I guess, my one plug, is we are doing some rebranding. And right now, nobody even knows of us or knows of we have like 5 different LLCs, and there's nothing really to advertise. It would be confusing. They're like, are you Simperama? Are you Veritas? Are you LSCS? Like, what's going on? And we buy most of our homes through wholesalers and so forth. And so with what we're really focusing on this year is, instead of trying to acquire paper wealth, the portfolio, the rentals and whatnot, and instead of trying to capitalize on every single flip house and make as much money as possible on each house and do so many houses, we're trying to really focus on how to do them more efficiently and effectively. And so we're going to start by rebranding. And so we've come up with a company name. And I can tell you because I just inked that sucker, so it's mine now. But it's called the Restoration Station.
Yeah.
And so we're having our logos and our websites made up right now, and we're going to spend some of our money on advertising. And we're really going to focus on trying to source more of our own deals. And so actually have some signage out and some cards and just some flyers, and because most of our stuff does come from wholesalers. We do have some people that call us and like, hey, we want to take a look at our house, but for the most part, we got to buy these through wholesalers. And a lot of these companies, like one of the biggest ones out there that sell the most homes, they have a $6,000 minimum on homes. They won't even take a house if they don't make $6,000. So if you take that $6,000 minimum and you times it by 30 houses, that's a lot of money that we paid somebody.
Right.
And so we're going to do that. And we're going to really focus on trying to come up, sourcing our own deals. And then, because we do have the portfolio that we have, we're going to try to structure some stuff around it. We're going to put more emphasis on funding more of our own deals this year, and being our own bank instead of paying so much money, because one of the best things about hard money and private money is that it's not yours, and it's great to be able to spend other people's money. And I don't. Some people get really focused on that. They're like, "Hey, it's 3% or 2% origination fee, and it's 12.99% interest." And I'm like, "Who cares? Somebody's giving you $60,000 to rehab a house and a couple $100,000 to buy the house.
But
you're using somebody else's money to make money. What does it really matter?" And so, in the grand scheme of things, it doesn't when you're trying to be an investor and you're focused on making money. But for us, at this point where we're trying to slow down and do less homes or the same amount of homes instead of focusing on more, but we're instead of trying to capitalize on each home, we're just trying to be more efficient as a company and just be more efficient at making money as a company as a whole. And so by funding our own deals, by not paying those origination fees, by not paying that 12.99% APR, and by not paying other people to find deals for us. Mm-hmm. And so that's where our real focus is going to be this year. We're trying to slow it down. I've got so much gray hair. It's all come in within the last 2 years or so. It's been nuts.
Well,
last year was so crazy.
That'll do it.
Yeah, we were. I couldn't barely keep up with myself last year, and so this year we're really going to focus on just being more efficient and effective as a company, and focus on making money like that instead of the actual house side of it. Not, hey, how can we make more money on this house, or how can we buy more homes to make more money? Instead, we're just going to try to be more focused on the business side of it.
I like it.
So
that's exciting
for 2022.
I can also see you being like a mentor and doing these like workshops. We buy ugly houses. Like,
I have a big advice for anybody thinking about being an investor. Don't. Sell me your house instead. If you got one in mind, call me and give me the address, please.
It's really funny because I deal with a lot of first time flippers because I get the leads from a hard money lender, and I'm like, "Are you sure you want to do this? Like, you could totally just call Chris Simpson."
I
They'll
pay
buy the
referral
house.
fees. Come on, this would be the best thing. Well, and that's what people don't realize. Going back to the start of the conversation, people not actually treating it like a job. So many people try to do it on the side or part-time. There's so much work involved. It's so much more than what people really think there is to it. And yes, you can hire contractors. Yes, you can have people work on the homes for you. But it's almost like babysitting. There's so much more to it. And you don't want to pay contractors to go get all your materials and do those things either. You wouldn't make any money. You'd spend it all. But there's just so much more to it. And then, of course, looking for houses and sourcing those deals. And there's just so much more involved that people don't realize that, it's a full-time job.
But I think there's a huge design element to this as well. That's you also have to have that artistic mindset where you can put stuff together and visually see how this could be and what its potential is and how to put things back together and make it look aesthetically pleasing for somebody to want to buy it and move in there.
Yeah, that's a real important part of the business for sure. Luckily, this last 2 years when we partnered with Lane and Bethany Stoltz with LSCS, Bethany does a lot of our design now, and that's really taken a big burden off. It's allowed us to be able to do more because I don't have to focus on that as much.
She's super talented.
Oh yeah, she's super good in there. I don't even know what her Bethany Stoltz designs. I don't know what her interior decorating service is called. I'm a bad friend. If you're thinking about anybody, that'd definitely be a great person to have.
We'll have her on later.
I definitely think it helps to have some kind of artistic flair. Mm-hmm. I like to draw personally, and I've always liked to draw. And so a lot of that comes out whenever we design houses. And it's important to be able to see what the house is going to look like before it ever looks like that. It's important to be able to have vision in it, and it does require a certain artistic touch to it. It doesn't have to be a masterpiece every single time in order for you to make money and be successful as an investor, but you do need to have something there. And it's one of the things I've also didn't realize that was so important. We started when we would start flipping homes, or we'd start buying homes to rent out, and we would try to walk people through. Like sometimes people would be like, "Oh, we really want to see this home. We really, we know it's coming up, and the real market's crazy. Can we look at this house early?" And I would say, no, I don't want you to see it until it's done. And they're like, "Oh, please, please, please." And so they're like, "We promise we got vision. We promise we got vision." And you walk through and you tell them what you're going to do, and they're like, "Oh, we decided it doesn't work out for us." And then you put your pictures online and you got it for rent. They're like, oh, the house is so beautiful. I was like, I know. I tried telling you to wait. So not everybody has that. It is an important thing to have if you're going to do it. But also being able to, going back to the before the hard money, being able to take advantage of people. So being able to take advantage of opportunities is a huge thing. So many people get focused in their head that they don't want to go into debt, or they don't want to pay. It's going to cost me this much, so why would I do that? It's going to cost me this much money to borrow that. I went to a Rich Dad Poor Dad conference 5 or 6 years ago, and it completely changed my outlook on everything. And it completely changed our company and everything. It was just a metamorphosis of just mind blowing for me. And it was the fact the guy was there talking, and he was talking about how many deals have you passed up on because you didn't have the money to do it.
Yeah.
I mean, how many times have you said like, oh, there's a car for sale for $5,000, and I know that I could. You're a mechanic or whatever. I know I could put $1,000 in the car and turn around and sell it for 10, but I don't have $5,000. Right. So why would I do that? I mean, I can't do it. I'm gonna have to pass up on this deal. And he's like, how many of you have actually got the checks in the mail from the credit cards? And then you just say, oh, I don't want to pay all that because it cost me the 5% transfer fee and the 21 whatever percent APR. He's like, I bet you could have wrote $5,000 on that check and bought that car. And it's like, and you would have cost you, whatever it would have cost you, you would have had to pay those high fees and that high interest. I was like, but then you could have turned around and made money on that car and made money, because you were so worried about what somebody else was going to make off of you, you passed up on the opportunity for you to make money.
On yourself, yeah.
On yourself. And so there's definitely a place for private money and for hard money lenders. And if you want to be an investor and you don't have the money to get started, it's a very good, thing to look into. There's definitely opportunities out there to be able to make investments without having the money to do it. Although this year that is going to be something we're trying to draft away from. But for new people, it's definitely something to get into. Definitely a difference between good debt and bad debt. And good debt makes you money.
Absolutely.
So don't be afraid to let other people make money off you, as long as you're making money too.
Absolutely. Bad debt would be like going to the convenience store and buying a pack of gum and putting it on your credit card.
Yeah.
That's bad debt. So, yeah. But people do that.
They do.
I mean, I did it in college. I'm literally 42 and still paying it off.
Yeah,
that pack of gum.
So close. That pack of gum. So close.
That was mind blowing for us, though, just to be able to say, you know what? Who cares what this person's going to make? Let me borrow this money. Let me pay these high fees. Let me pay this high rate, and actually not be so scared of debt that I was afraid to take any debt on.
Yeah.
It really grew my business and really transformed the way that we did things, and we wound up making so much more money because of that. And I mean, that's probably the single most important aspect of our business that we changed that got us to where we were today.
Exactly. I mean, that's what I tell my inspector. We invest in equipment. We invest in new certifications, because that's all going to be, it's an investment that's all going to return to us at a later date.
Absolutely. Absolutely. Well, I have really enjoyed getting to know you and meet your family, and y'all becoming a part of my circle over the last few years. So I'm grateful that y'all kind of popped into my life, and y'all bring this really fun energy with y'all. So it's always a good time having you around.
Thanks. I appreciate it.
We'll definitely have you back on the show if you want to.
Yeah, if you want to.
Yeah, for
Johnny
sure.
will have some whiskey. It'll be more fun.
Yeah, I walked out of the house, my bottle's sitting there.
Yeah.
Bitch.
Well, definitely it sounds more fun.
It does.
Yeah.
It is a
Whiskey
lot
in
more
the
fun.
mix.
Yeah.
A lot more fun. At least for me.
It's
I don't know about
ironic that
anybody
we're
else, but
sitting in a tutoring center and we'll be drinking whiskey.
I can make Bloody Marys.
It's fine.
It's great life lessons. This is an important part of life.
It is an important part of life.
It doesn't have to be whiskey.
I can be able to
make
relax and
something
have
else.
fun.
Well,
This is the first thing they teach you.
Absolutely. Well, thank you for joining us today, Chris, and like and subscribe down below, and thank you for tuning into the Well House with us today.
Appreciate it.